Realogy is home to some of the most iconic real estate brokerage brands, Century 21, Coldwell Banker. The stock just went public this morning, and boy, is it taking off. The stock is already up 26%. They priced above the range. Also, I'm here with the CEO, Richard Smith. So clearly, investors are buying into a housing recovery when they buy your stock.
Yes, they are, clearly.
So tell me what you think, because obviously you got your hand on the finger on the pulse. Are we starting to see a comeback?
Yes, we are. In fact, if you look at all the data, the National Association of Realtors is forecasting 14% growth this year, 14% growth next year. With the normalization of loan underwriting standards, we have another 6 points, 20% growth. Even the naysayers like Freddie Mac is forecasting in the out year, 2014, 14% growth. Now, couple that with the average price increase that we're seeing in the second quarter, and it appears to be continuing. Absolutely, we're in a sustainable recovery.
What are your brokers saying about their customers getting loans? Because everyone I know has said it's so hard to get a loan. They put you through all the paces.
It's difficult, but what's interesting is that in spite of that, we're seeing a housing recovery. So the underwriting standards are very difficult. But again, in spite of that, you're seeing substantial unit growth, and that's, I think, very healthy environment. Now, with the easing of those standards, we're going to see a lot more growth.
Let's talk about your debt. Everybody is, as we know, with Realogy, even though you've raised a lot of money, you've still got $4.6 billion in debt overhanging, the big long-term debt. How are you going to tackle that?
Well, remember, at the IPO, almost half of that goes away. And then with the deleveraging of the company, the macro environment, and the significant cash flow we generate, we can delever by about a turn a year. And clearly, the investment community understands that. So the debt relative to where we've been, we can handle this quite easily.
You are closing a lot of offices, though, so how does that fit in with you're seeing this big rebound, but you're closing offices?
We closed offices when the market demanded that. So at the peak of our company, when we had 1,100 offices, we also had the volume to justify those offices. We're down to a core run rate of 723, and that's what the market will bear. So we adjust and flex in accordance with the market.
I'm going to jump back to the debt. On the debt, you've got a big, number looming, 2016. Do you feel that when you get to 2016, everything's going to be okay, or do you feel like you kind of got the clock ticking?
That's term loan debt. That's probably our cheapest debt. It's very easy to refinance, and with the changed economics of our company, we're less concerned about that.
All right, so when we're looking at the map of the United States, where do you see most of the activity coming from?
Well, what's interesting about the recovery, it's occurring everywhere. So it's occurring at different levels, but it's literally occurring everywhere. Price appreciation is occurring almost across the board. This is literally demand outstripping supply. So we can all, as citizens of this country, start seeing price appreciation and also unit growth. So you still have markets in the Midwest that are never volatile to begin with, but they're stable, consistent markets. But the coasts are starting to participate in a very big way. So this is encouraging for all of us.
How are online sites like Zillow and all these Property Shark and such, how are they affecting your business?
Yeah, they're terrific end users. They're great marketers. They're displacing the classified advertising, the print, the brochure, and the old forms of media that were ineffective. So the end suppliers like Trulia, Zillow, Realtor.com, even the New York Times. So these are terrific marketers of our product. So we get the economics, they get the advertising revenue. It's a good relationship.
All right, well, hopefully I can go and look at my house price and see that it started to go up. If Mr. Smith says so, then I guess I'm going to have to believe him, and that's Richard Smith, CEO of Realogy.
This market has fewer players.
We're coming into a Monday where we're
would
going to
enter in a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.